The bank just lost their monopoly over a multi-trillion-dollar market that they have been fighting to keep control over over a decade now. What just happened here marks one of the most important moments in financial history, where the definition of money itself is changing. And if you're not prepared for these changes and what this means for the digital assets XRP, then I genuinely believe that you may be left behind by what comes next. There is this company called Ripple that is trying to solve a multi-trillion-dollar liquidity problem, and the chief banking regulator in the United States, the OCC, just gave Ripple permission to do it. Ripple, alongside of many other companies, were just given conditional approval for a national banking charter. This comes after Ripple has spent years and over $100 million fighting the Securities and Exchange Commission and being labeled a scam and a fraud by key figures within their industry and beyond. Now, Ripple is not the only company that received this conditional approval. They also gave this conditional approval for BitGo Fidelity digital assets and Paxos as well. But if you cannot see that these companies are not playing the same game, then you're missing a critical piece of the puzzle. So many people think of Ripple as a crypto company, but Ripple is a financial services company with several different financial licenses, and now they're about to get the most important one under their belt. And that's not the only thing that sets Ripple apart. The thing that really sets them apart is that Ripple is the only one of all these companies that has its own volatile native crypto asset called XRP that is systemically important to its entire business model. So Ripple now has conditional approval for a national banking charter. But what is a national banking charter? And what does that actually mean? A banking charter is a federal license that's granted by what's called the Office of the Comptroller of the Currency. You'll see it referred to as the OCC, and this allows an institution to operate as a bank or a national trust bank. And in this case, that is what Ripple has been approved to be as a national trust bank. Ripple did not get approved here or conditionally approved here to become your traditional consumer bank, but rather a national trust bank, which is focused on custody, payment, settlement, and fiduciary services. Okay, and they're going to be doing this for other companies. Now, this approval is conditional, so Ripple still has to meet requirements before this charter becomes fully operational. Now, once they are fully approved, Ripple will be able to operate nationwide under federal oversight, provide regulated custody and asset services, potentially integrate their stablecoin operations under a federally supervised entity, and benefit from federal preemption of state-by-state licensing. Okay, these are the main benefits that they're going to get from this. But what does this actually mean? And why are these big banks potentially going to be upset about this? To understand why this is not great for big banks, we have to fully understand Ripple, their business model, and their mission. Ripple is a fintech company that enables banks and other financial institutions to send money to one another cross-border more efficiently. Okay, this is competing with big banks who are able to get away with charging incredibly high fees for cross-border payments, as they are the only ones that are allowed to offer such a service. We've seen some fintechs pop up over the past 5 to 10 years to try and solve this problem as well, but very few crypto-native companies have the licenses that allow them to do this in a way that Ripple is about to be able to do now. Ripple has a solution called on-demand liquidity, where banks can swap one currency for another instantly and for negligible fees. The major market that Ripple is going after with this on-demand liquidity solution is a $16 trillion market involving what are called nostro vostro accounts, where banks will leave money sitting around in foreign currencies for whenever they need it, for when their customers need to send payments across board, or if a client in one part of the world needs to send.